No one is really talking about this, and this quiet balance sheet expansion continues beneath the surface despite them saying they're still in a cycle of QT. Now, speaking of the macro, let's just look at a couple bullish signs and bearish signs for the near term. We've been discussing some of these for the longer term, but I want to focus on what's right in front of us. So in terms of the bullish tailwinds we have right now, I would say the biggest two that not a lot of people are talking about is first the Fed's balance sheet expansion. The Fed has injected another $3 billion into the banking system in the last week. On October 24, 2025, they injected that $3 billion, bringing the total liquidity additions to $14.7 billion in October alone and $33.5 billion year to date. No one is really talking about this, and this quiet balance sheet expansion continues beneath the surface despite them saying they're still in a cycle of QT. Next, also on the Fed side, the overnight reserve repurchase agreement facility has fallen from 2.55 trillion with a T to 2.4 billion, a 99.9% reduction, which marks the end of the COVID era liquidity wave. Now, cash parked at the Fed is totally gone, or almost totally gone, and money market funds are back on the market. System reserves now sit near critical levels, and what does this mean for us? That's a good JP. Now, we do need to be slightly cautious. There are a lot of longer-term warning signs amidst unemployment, consumer debt, leverage, CLOs, government debt rising. So a lot to worry about, but those are all longer-term headwinds, and we most likely won't see the impacts of those for another 12 to 24 months.